Oh, look at this. It is 8:59. Good afternoon or good evening, everyone, depending where you are. Like Jimmy Buffett says, it's 5 o'clock somewhere. Anyway, this is James from the Dividend Investing, or the Dividend Stock Talk. We're going to be talking about dividend stocks and why I believe in investing in dividend stocks for monthly cash flow. Because, after all, my bills come every month. Some strange reason I get a bill in the mail and I said, wait a minute, didn't I pay this already? And I think to myself, wait a minute, that was last month. So they send me another one every month. Bill. Surprised I didn't name any of my kids' bill. I got enough bills in my life. Okay, so it is Thursday, March 9th, 9 p.m., and we're getting started with our dividend capturing and going over some of the trades that we've made over the week and finding out exactly where we are and what we're going to be doing tomorrow. So tomorrow, as we all know, options expire, and I've just started getting into, well, not really getting into, I've been doing it for a while. Just started getting into showing people my option strategies with the dividend stocks, because it's a lot more profitable than just dividends. Don't get me wrong, dividends is great. You average like 1% a week or even 1 or 2% per month, which is a lot better than the banks are offering nowadays. So if you're getting 1% a month, you're looking at 12 to 15% once you compound it. 12 to 15% per year, which is a lot better than anyone else is offering. But that's not good enough for me. For me, I want to get 1% a week. 1% a week comes to roughly around 50 to 60% per year compounded. Does it work every week? No, not every week, but for the most part, I'm averaging 1% a week with my dividend capturing strategy. Now, once I add the options in it, this year so far, it is crazy. I am over 2% per week with the options in the dividend investing. Now, I'm not suggesting you guys do this. I'm going to show it to you, but I'm not suggesting you do it quite yet. I'm suggesting you get comfortable first with investing your own money, number one. Number two, get comfortable with the idea of being in control of your own financial destiny. Excuse me. My goodness, this cough, believe it or not, I'm still having this cough after. Got it in December from my son. That was so nice of him. Christmas present, Dad. Here you go. Merry Christmas. What does everyone get? Everyone gets toys, presents, gifts. I get a cough. And it's still here in March. Second or third week? What are we? Third week? Well, second week in March. And I still have this cough that won't go away. All right. Let's get down to it. So like I said, it's Thursday, tomorrow, Friday, the options expire. So let's see where we are. I should say weekly options expire tomorrow. Monthly options don't expire until the 17th, which is the third Friday. Okay, the third Friday of every month, the monthly options expire. Now, stocks and some ETFs, electronically traded funds, expire every Friday. Okay, now they don't have weekly, believe it or not, they don't have weekly options on the third Friday of the month because those are monthly options. But tomorrow the weekly options expire, and let's see what we're looking at. Now, I'm going to quickly jump over to our website where, for those of you who are members, you get this in your mail once a week. Like every Sunday, I'll send out a list of all the dividend stocks for the upcoming week. Now, this week, believe it or not, we only had 36 companies offering a dividend this week. 36 is crazy. Last week there was like 140. Plenty of activity last week. And the week before that, there was well over 100. But for some strange reason, there's only 36 this week. So my trading was very on the light side this week. So I didn't do a lot of trades because there wasn't a lot to pick from. Now I have several different accounts that I trade. The option one, which I'll be showing a lot tonight, I didn't have a lot of trades because there wasn't a lot of weekly options available. Okay, here's our list. Okay, dividend capturing for weekly options. Like 10 companies. Now these 10, don't get me wrong, WTW has a no yield, no dividend, so I couldn't even do that one. And then right here, PBR, same thing, couldn't do that one either. So that brings my list down to 8. And this one here, 1.26% yield, Don't even waste my time. So now I'm down to 7. So I get 7 companies to look at to possibly do a dividend capturing with options. But coming up to the other software, look, I only have 3 that actually work. WFC, SPLS, and MTD. Now I can tell you right off the bat, staples I don't invest in. Now I'm going to show you a little bit further into the conversation why I don't, because all the numbers look great. Look at this. 1 day and a half, 2, almost 3 days. So I can be in and out within 2-3 days on staples and gathering this small dividend. Now, you might be looking at the dividends only 12 cents. It's not a lot of money. And you're absolutely right. It's not a lot. So why do I bother? I'm going to tell you why I bother. Because I am extremely lazy. Not really lazy, but I have other things I'd rather be doing. Sleeping, taking a nap, going for a walk, going fishing, going out dancing, doing something, enjoying life, living, just having fun. I enjoy doing stuff, and I don't want to be sitting in front of a computer. So I want to find a simple, easy strategy. I can make a few bucks, enough to pay my bills, and then just move on with my life. Now, let me get a little deeper into that. When I say I want to, invest into something, I want to invest into something that's safe, secure, and I'm not having to worry about it. So that's why I designed the software. The software goes in and it finds exactly what it is I'm looking for my style of trading. I want a good, solid, secure company that's going to be around that I wouldn't mind holding for a very long period of time. Okay, so if I'm going to buy something, let's say I buy WFC. Okay, now WFC, I'm going to buy it with the intention of holding it for the rest of my life and collecting the dividend, the 2.59%, for the rest of my life. Hey, I'm going to get 2.59% for the rest of my life on this stock. Great, why not? And they consistently increase their dividend every year. So every year I get more and more money. Great, keeps up with the cost of living, That's why I go into it. I go into it with that philosophy, for that thinking. I want to make sure that it's going to be a solid company. It's going to be around, and I want to see what they've done in the past 5-10 years. If they've increased their dividend payment every year for the last 10 years, great. It's something that I wanted to look at. So that's why I came up with the software in the first place. I wanted to make my investing simpler. So every week I had this list that I have to go through. Every company is paying on a dividend. And then the software gets rid of the junk. If they don't have 10 years worth of data, I don't want to bother with it. If they haven't increased their dividend payment every year for the last 10 years, don't want to bother with them. I have enough on my plate to have, I just don't want to do it. I want to find simple, easy, and profitable. Okay? All right. So I have a certain set of parameters. I go into the stocks thinking that I'm going to buy it and I'm going to hold it. I'm going to collect the dividend for the rest of my life. But if I can collect that dividend, get out, and do the exact same thing next week with a whole new set of stocks, hey, I want to buy all these and hold them for the rest of my life, collect their profits, okay, fine, let's do it again. Over and over and over again. So now I'm not getting 2.59% per year. I'm getting double digits. I'm getting 12 to 15, 20, sometimes even 30% per year. I mean, I have one client who gets over 50% every year. I mean, I showed her the strategy a few years ago, and she's a wonderful lady. And she's always averaging over 50% a year. And she loves it. It's simple, it's easy, and it's profitable. Is it going to continue doing that? Who knows? I mean, if a company's been paying out dividends and increasing every year for more than 25, 35, 50, there's a couple companies out there that have been increasing their dividends every year for over 60 years. 60 years! I'm not even going to be alive in 60 years. Well, I hope I'm not. I mean, hell, if I'm 53 now, in 60 years, I'll be 113. Anyway, increasing their dividend every year. So great. I want to buy it. I want to collect the dividend. And I want to move on to the next company that's offering a huge benefit such as that. I buy with the intention of holding. Okay, I collect a profit. I get out and I do the exact same thing next week. I buy with the intention of holding. Collect a profit, get out and do it again. Okay? If the stock market goes down, if everything tanks, If a company has been doing it for 60 years, and you have to admit, over the last 60 years, we've been having problems. You had the dot-com bust, you had the real estate bubble, you had the financial crisis, you had the oil embargoes back in the 70s. I mean, that's part of the 60 years, you know? And they've constantly increased their dividend payment to their investors. So, hey, great. Even in '08, everything goes down. And you look at some of the stocks, they lost 50, 60, 70, some of them even 80% of the value of the stock price. However, this is something people forget to think. Stock price only, the public's opinion. It has nothing to do with people going to work. I mean, great, stock prices plummeted, but people still showing up for work. Sally, the secretary, shows up and answers the phone. Tom, the plumber, the maintenance guy, he still comes in there and cleans the bathrooms. And Ted, the executive, he still comes in there and pushes the paper around. People still going to work regardless of the valuation of the stock. The stock is nothing more, in my opinion, the public's opinion of the valuation of the company based on whatever information they have at the moment. Whether it's realistic or not, totally irrelevant. Because we all seen what happened in '08. I mean, '07, everything's sky high, everything looks wonderful. All of a sudden, the financial world collapses and everything loses value. People panic, they run for the hills. What happened? '08, '09, stock market tanks, everything loses value. And then 10, 11, 12, everything starts to recover. And here we are in 17, everything is all happy and fruity again. Great, wonderful. Is it going to stay this way forever? No, never does. So, buy a stock with the intention of holding it for a long period of time. Worst case scenario, you get 2.59%. Great. Better than nothing. Better than a poke in the eye. All right. With that all being said, I go into buying a stock with the intention of holding it long term. If I can grab the profit and move on to the next company that I have the intention of holding it on long term, great. They're good quality stocks. I have no relation to Warren Buffett, no relation to Sam Walton, so I don't have millions upon millions of dollars. So I have to rely on what I have, make it grow the best I possibly can. And 1-2% per week, hey, I'm happy with it. If you can find a better way of getting 1 or 2% per week on your invested capital, hey, I'm all ears. Let me know. But it's got to be safe, it's got to be secure, and worst case scenario, I still got to make money off of it. All right, this works for me. If it works for you, great. So, moving on. Let's go. Getting out of here. Love my kids, love my kids, love my kids. I always have to say that whenever they give me something I really don't want. But that's what we do as parents. We love our children regardless. All right. Let's jump onto the accounts. All right, here's my dividend capturing one. The only thing we do on this one is just capture the dividend. We get in, we buy the stock, we collect the profits, collect the dividends, and then we move on. You can see down here, profit year to date, 9.8 on a $100,000 account. That's 9.8%. We're on week number 10, so that's, not even 1% a week. So we have until Friday, tomorrow, to make up that 0.2 to keep my average at 1%. All right. It looks like we sold Hershey today. Yep, we bought 400 shares, and then with the we collected the dividend, and with those dividends, we actually been able to collect another 2 shares. We ended up selling them for $108.66. Hey, okay, not bad. I believe, if I recall, M, which is Macy's, is coming up to pay its dividend in the next couple of days. So let's quickly take a look at Macy's. Okay, Macy's starts out the year way up here at 44.13. It went sideways for a little bit to make a high of 45.50, and that was back almost a full year ago, March 18th last year. Slow downturn from March all the way down into it hits a low right in May, in the middle of May. A little bit of upturn into August, sideways for a little bit, and then booyah, right there. Oh, booyah, that's what Mikey says. Right around election, the thing jumps up. It goes from, where we go, 37. She jumps up to 45, which is almost $8, which is 25%, just about 25% increase within a month period of time. And everybody realized, hey, it's Macy's. Where do you go from here? So makes it drop back down to the beginning of the year. Makes another low in January of 28.47, sideways for a couple bits, and she's settling right where she is now at 31.53. Now let's find out where we got into Macy's. All right, we got into Macy's on the 21st. We got in at 33.09. All right, so 33.09 on, what day was that? The 21st. Okay. All right, it is the 21st. Let's go in and check the dividend capture. Because this right here, this strategy, the way this one is set up, is dividend on steroids, where we look for the 2.5%. So I'm actually looking for it to increase 2.5% of the purchase price and then get out. So it's not actually dividend capturing, so to say. So dividend capturing is the lower end, which kind of like the tail end of what we do. So really quickly, let's go to Yahoo and find out more information on Macy's. All right, Macy's. Now, this is the reason why we got into Macy's in the first place. Let's get rid of that blue line by clicking on the average button. See, now it gives me my seasonality chart, which allows me to look at 1 year on top of another, to show me how that stock has performed over the last 10 years. And as you can see, it usually in and out within 1 day. So this last year, it took 5 days in order to hit the target. And we're only looking at 37 cents, which, if we hold on to Macy's, we can grab 4.9% yield, which is not bad. Okay, so 37 cents. Had we done 37 cents on the 21st, which is right here. Okay, remember, in the opening of the day, this number here is opening. This is the high of the day, the low of the day, and the close, so on and so forth. So keep your eye on this number here. Now, we put the order in the day before. Okay, so first thing in the morning, my order is sitting on the market maker's desk saying, hey, give me 1,600 shares at this price, at the opening price. So whatever the stock opens at on that day, that's what I get. All right, so the stock opened up at 33.09. Okay, and hit a high of 33.49, which is 40 cents. Which, had I done dividend investing, if I just went in for the dividend equivalents, I would have been in and out on the same day. But I didn't do that here. I went for the 2.9%, which didn't hit it. And apparently, looks like I got, when did I get this stock? Because right here is usually the time when you buy it. All right, 034. What the heck is 0 hours? Well, got me on that one. Okay, but had it been first thing in the morning, which what it should have been, I would have been in and out on the same day if I went just for the dividend. But here, I'm looking for 2.5%. Why 2.5%? I've been investing for over 20 years, and I'm finding this strategy works best with 2.5%. I actually have a number in the software that tells me how much the stock actually moves. And it's not on here. Okay, here we go. Daily moving average. And it's not on this one. Let's try another one. Is Macy's on this one? Okay. M's not on this one either. Oh, Tiffany's is right there. All right, Macy's is not on here, so I really couldn't tell you at this moment in time. But if you look at this number right here, the 20 MA, which is the moving average, this number is directly related to the opening of the day. So take the opening of the day, you multiply it by 0.01, 0.23, and that gives you an average of how much that stock moves over the last month. Okay, so what's 1% of $34? That's 34 cents. 30 and 1.23, which is probably like 37, 38 cents, or maybe 40 cents. So we'll move an average of 40 cents for the day. Okay, this one is a dividend of 28 cents. Would have done that. A yield of 3.22. Gotta like that. It scores an 81% for the dividends on steroids. I like that. And 100% on the dividend capture. I would have done this one. Yes. All right. So I didn't do this one because, like I said, on this one I'm using actually. I did Macy's. So can't do them all. You know, I don't have it. I wish I did have enough money to do them all. That would have been lovely. But I don't, so I can't. All right, so we did Macy's, 1,600 shares. Had we done just the dividend capturing, we would have been in and out on the first day. But instead, I'm looking to get 2.5% of the movement for this one. Now, did it move 2.5%? I really don't know. Let's find out. All right, she opened up at 33.09. Okay, made a high of. All right, let's just for the fun of it, let me get my calculator out. Okay, she opened up at 33.09. I want to multiply that by 0.025. 82 cents. We're looking to get 82 cents. Okay. So 82 cents plus 33.05. Was it 33.05? Well, 33.09. Okay, so 33.09. 33.09. So our new target price is 33.91. And our high for that 10-day period was 33.73. So it's off just a little bit. Wow. Okay, so let's take the 33.73. Okay, let's work it backwards. $33.73 subtract 33.09, and then we divide it by 33.09. 33.09, and that equals. All right, so the stock went up 1.9%. Okay, so I use 2.5 because over the past 20 years, I find 2.5 to be a lot closer to a number that's usually hit than not. Okay, so it's a higher average. I'm a numbers guy. So if you know anything about the bell curve, 2.5% is the best number I've found to use in order to make it worth my while and still make it nice and profitable. If I decreased it to 1.9%, I'd make less money, but I'd hit more targets. Okay, I'd have to do more trades and probably make more money that way. But more trades I do, more money in commissions I have to pay. So I like 2.5%. It doesn't always work, so guess what's going to happen? All right, let's get out of that. Let's go back to, here we are here. Okay, so the dividend payment is coming up for Macy's. Exactly when is it? Let's find out exactly what it is. Now, here's the 10-year chart for Macy's to give you an idea, another idea of why we got into Macy's. Macy's was 10 years ago, right around 43. But look at all the dividends they've been paying out. It should be going sideways for quite a while, still going sideways. So we bought it anyway. So let's get let's go right to Yahoo Finance. This is going to take a little bit of time to get to because it's not as simple and easy as I'd like it to be. Even though I am hardwired in, I should be able to go a lot faster. Let's put in Macy's. Come on. It should be a lot faster. So here we go, Macy's, and enter. Oh, flying car. How lovely. Interesting. Doesn't want to do it there, so let's go up here. Come on. Even being hardwired in, sometimes computers don't go as fast as you'd like them to. I probably have a lot of crap going on in the background, why it's not working like I'd like it to. Earbus. Interesting. Come on. This is not going the way I want it to, so let's get out of here. Not that one. Where were we? Right here. Sorry about this, folks, but sometimes, although it's quick and fast, it's not always as fast as I want it to go. Come on. Alright, most active, top ones. My list is empty. It's not doing what I want it to do. Now I feel like an idiot. Ugh. Okay, so let me get out of here. Get back to where we were. Anyway, the dividend is coming up. Oh, you know what? I can find it. I should be able to find it. Let's clear filter. And today being the 9th. Alright. Alright, it's not going to be today. It's going to be in the near future within the next couple of days. It's not there. So let's go next week and see what we have next week. Look at that, 120 on Monday. 120 companies on Monday alone paying a dividend. That's nuts. And there's Macy's right there. Okay, so Monday, Monday, Macy's is going to be paying out their dividend, 37 cents. Okay, they announced it February 24th. EX date is the 13th. The date of record is the 15th. So if I hold this into the 15th, which is Monday, which means I get to collect that 37 cents. And what do I do then? What I'm going to do is, let's get it down here. View trades. All right. I'm into the stock at 33.09. Great. So come Monday, that's the EX date. Okay, so I already own the stock. All right. Several things I can do. One, hold it until Wednesday and sell it after Wednesday for $33.09, which is exactly what I paid for it. And I'd still be collecting that 37-cent dividend, even though the stock is not 37 cents higher than what it is. As long as it's $33.09 or higher, I make a profit on the stock. And I also get to collect 1,600 times 37. What is 37 times 1,600? 0.37 multiply 1,600. And that equals, all right, that's almost 600 bucks. All right, 590 bucks, you take off the commission off that. About 575, somewhere in that area. Now, what else can I do? Oop, open up the wrong one. Okay, so that's what I can do. And what else can I do? Watch this. Open up Macy's. Waiting for data. Here we go. Okay, that one's not going to work. Now, next Friday. All right, let's open up this calendar so I can quickly show this to you. All right, here's today. Now, Macy's is going EX on Monday. All right, we didn't hit the 2.5% target that we were looking for. It was only like 87 cents. Okay, no big deal. All right, I already own 1,600 shares. So if I hold it and sell it after Wednesday, I collect the $590 for the dividends, and I can sell an option for exactly what I paid for it. Now, what did I pay for it again? Now, you probably know because you were probably watching and I wasn't. 33.09, wasn't it? All right, 33.09. Okay, where's 33? Right here. I can collect another 15 cents, but you got to take the 9 cents off of that, so I'll be collecting 6 cents. So 6 on top of the 57, that's 63. So if I hold it until sell it on Friday for 33.09, anything over and above 33.09 is going to be profit, along with whatever that contract is. Okay, so if I do that, I have 16 of them. Okay, at 15 cents right there. All right, it's another $240. Okay, so 590 from the dividends and 240 for the option, and I still sell it for the exact same amount of money I paid for it, 33.09. Hey, everybody's happy. However, it all sounds fine and dandy at this moment in time, but come Monday, all these numbers here are all going to change. The closer you get to the date of expiration, which is next Friday, 8 days away. See that number right there? 8 days away. These numbers all change. Actually, these numbers change. Believe it or not, these numbers here, these numbers here, these numbers here, these numbers here, all change. And go that way. There you go. All these numbers change every second of every day for every stock, every strike price, every month of expiration. It's crazy the amount of numbers that are calculated on a daily basis, just one stock. All right, so anyway, that's what we're looking at for for Macy's come Monday, or come Monday, because that one, as you can see, is the closest to expiration, and DPS, which is probably 3 days later, that's probably going to go EX probably Thursday or Friday of next week. So the following week we'll be looking to do something like that also, if it doesn't hit the 96.61 target. The 96.61 target is the 2.5% profit that we're looking at. Okay? All right, so let's get out of here and see what else we're doing. All right. Now this is the option one. Remember I told you that I say I trade several different accounts. One we do just dividends. One we do the dividends on steroids, which is the one I just showed you. And this one we're actually doing dividends coupled with options. This one, as you can see, overall profit and loss to date is 28.7. So that's actually, you can change. I trade 100,000 in each account to give you an idea, to make the math easier. So if my profit and loss year to date is 28,000, that's 28%. Okay, so 28,000 is 28% of 100,000. Okay, which roughly just a little bit less than 3% a week, because we're in week number 10 of the year, because we are only into, where are we looking at? Okay, 2 weeks in March. Okay, that's 3, 4, 5, 6, 7, 8, 9, 10. 10 weeks. 10 weeks, and we're already at 28,000. That's 2.8% per week. That is nuts. Now, let's take a look at where we stand, because all these options, all these trades expire tomorrow. Now, let's open up BBY. All right, BBY started the year at 34, dropped down a little bit, went sideways for half the year. All right, and then in August she shot up from 32 up to 38, which is $6, which is I don't know, 30% in a day. That's nice. Goes sideways for 2 or 3 months, and then right around election time, this thing shoots up from 39, and it goes up to 46. 39 to 46 is 7. About another 20%, somewhere in that area. A little bit less than 20%. To hit the range of 45, and she's been going sideways ever since, to bring us to where we are now at 44.84. Okay? So we're at 44.84 now. Well, let's see what kind of option we did on this one. All right, we did the 43.44 call spread. We had 20 contracts. Okay, basically what that means is, as long as the stock stays above 44, we're into profit. So that's all profit. If she drops below 44, that means I get to buy 2,000 shares of Best Buy. Okay, not a huge loss, but this thing's got quite a ways to drop, being 84, to go all the way down to 44, which is down to here, which is basically right where support is. All right, it looks like a pretty good support line. All right, now Johnson & Johnson. All right, let's put J&J in here first before we start talking about Johnson & Johnson. This is an interesting trade, totally uncharacteristic of what we do. Okay, Johnson & Johnson started a year ago at 106. Okay, from 106, in about a 4-month period, she goes from 106 to 125. That's 19 points. Okay, that's 20%, just about 20% in 5 months. That's 5% per month. That's not that bad, you know. Okay, from there, slow decline back down to the 110 area, got sideways for a little bit. Now, what I want you to look at is right here. Okay, from end of January 25th, to where we are now, March 9th, this thing had 5 down days. 5, that's it. She went from 111 to 126. So what did I do? Being a trader for all these years, almost anyone can see that nothing's going to go up always. I mean, there has to be a top somewhere. Okay, so what I did is I bought some put options. What does that mean? It means I'm betting that there's going to be some major profit taking pretty soon. Okay? I bought the 114s, which is way down here. I bought it for like 3 cents a contract. Okay? So, at the moment, they're basically worth nothing. Okay, March 10, 17. And I'm really hoping that that's not this week. I'm hoping it's next week. Okay, because right now they're only worth 4 cents. So they're worth just about nothing. That's if I want to buy them. If I want to sell them, they're worth nothing. Okay, J&J. Let's find out exactly what they're worth at the moment. Holy crap, it is tomorrow. All right, so I thought they were going to be worth something tomorrow, and they're not. Not even a penny. Oh well. Win some, you lose some. Gambled on that one, didn't make anything. I should have bought them further out. Let's say April. Let's get rid of that. Let's get rid of that. And let's see what these things are going for. Okay, the 114 puts are going for 39 cents if I wanted to buy them. If I want to sell them, that's a big spread. Look, you can buy them for 39 cents each. If you want to sell them, they're only worth a penny. Something needs to turn the Kool-Aid there. But why would I buy those when I could drop down here and buy the 115s for 23? But it's better to look at the delta, because the delta gives you an idea of valuation. For each dollar the stock moves up or down, the option increases for a certain price. I don't want to get into that now because it's nothing but confusing. That was nothing for me, nothing more than a gamble, and shouldn't have done that one. Well, no, not I can't say I shouldn't have done that one, because you never know. All right, the 114s are worth basically nothing. If I wanted to buy them, they're worth a penny, but they expire tomorrow. It's worthless. So what I'm trying to say is nothing goes up forever. Look at this, from January 25th to where we are today. That's a big move. And people who take big moves, they want to collect their profits and they want to run. So, hey, I want to collect my profit. It's called profit taking. It's not a profit until you actually take it. Profit taking is going to do nothing but cause this thing to go down. Okay, is it going to? We never know. But eventually it will, because nothing goes up forever. All right, let's look at what we're at next. Reset that, get back to monitor. All right, that was J&J. So LVS, which is Las Vegas, let's put that in there. LVS. Now LVS started the year last year right around 49. This, I can't really, don't know what to call it. You know, it goes up for a little bit, comes down. It goes up, comes down. Goes sideways for a little bit, goes up, goes down. Goes up, come down, up, down, up, down, up, down. Well, just exactly what you think a stock is going to do. So a year ago, she starts out at 49, jumps up to 54, drops down to 49, jumps up to 53, drops down to 44, jumps up to 48, drops down to 42, jumps up, drops down, and continues going basically nowhere, up and down. It made a low in the end of June at 41.75. From there, from 41.75 in June, December, she's at 62, which is almost a 50% increase. From there, she had a big down day at the end of the year on December 27th, and has been continuing a downward trend since the beginning of the year. Takes us to where we are today at 53.75. And let's see what we got on this one. All right, she's at 53.75 now. And we're at the 50, so she says above 54. How can I say in the money if we're, oh, because she's above 53.50 and below 54. So if she stays below 54, we're going to end up buying that one. And how many shares of that one? 2,000 shares come Monday. Never know. Oh, that's why, because I have a lot of those shares, don't I? I don't know. Anyway, looks like we might end up owning that one. STX starts the year out at 34.84, goes sideways for 2 months, and then makes a drop to the low of the year in May, mid-May, down to 18. And then from mid-May, up, all the way into the new year to make a new high at the beginning of the end of February, beginning of March, makes a new high. Okay, so from the new high of 49.79, this thing had 1, 2, 3, 4, 5, 6 down days in a row. What would make me think of getting into this one? All right, STX is where we are. Let's take a look at the trade, what position we're actually in. The 48 and a half. Looks like we're going to be buying 22,000 shares of STX come Monday, because right now she's at 46.68. which is quite a ways off of the 48.85. Okay, so let's see what we're in for with STX. Now, looking at STX, and we're into this one, so we gotta look another week out, the 9th, and we'll look next week, I believe. And let's plot the dividend. Okay, I'm wrong again. All right, week of the 22nd. All right, you got me on this one. See, it says right here, no data, so I have to find out when STX is actually having its dividend. Got me at a loss here. All right, so let's just plot the chart for this week. And we're on the 9th. All right, the 9th. We're just going to plot the chart because I can't find out where the dividend is. All right, so here's the chart. This is what we're looking at. We get in 10 days prior to, and 1.5 days. It's not bad. This thing, 10 days prior to, it should have been out by day 3, March 3rd. Oh, no. Okay, I should have been out within 4 days. All right, she's going to go sideways, but constant up factor. All right, so we're going to have to collect our dividend and get the heck out of this one. It's not showing on this, I don't know why. All right, let's get back to what we were looking at. Not that one, we already looked at that one. All right, that's STX. We're at 6 days and down. Looks like we're going to end up owning this one at STX. What was that? 48.50. 2,000 shares. Okay, so let's see what 2,000 shares is going to look like next week. STX. Try that again. There we go. And we're looking at not that one. We're looking at this one right here. And 48.50. Okay. 25 cents. 48. We ended up buying it. And if it's only worth 46.25, that's not a lot. We're going to have to get it at 45.25 in order to make any money off of this. However, 2,000 shares. If we sell the 48.50 call next week, that's going to bring in 500 bucks. Okay, so if we do that every week until it gets back to 48.50, that's 500 bucks every week. Okay, I could deal with that. It's not that bad. We will find out Monday. I can't really tell you now, because those numbers change all the time. So Monday I'll be able to get better accurate, because it looks like we're going to end up owning this one, STX, come Monday morning. Okay, 2,000 shares, and we'll find out what the 48.50 is going for come Monday. We'll go from there. So remind me, any questions, we'll take a look at it that way. What else are we looking at next? Next, TJ Maxx, we're just trying to cover a position. We have 100 shares left over, because when we did we sold a couple of options on that, ended up going the wrong way, ended up with a short 100 shares. So TJX looks like we'll be holding this one for quite a while, because right now she's at 77.94, and we need to get rid of this thing at 75. That's 2.9. That's $2, and that's almost $3 drop we have to wait to get rid of this one. I'm not worried really too much about it, but I have to buy it back eventually. TSO is our last one, and then we're going to close out for the evening and check see if we have any questions. All right, TSO starts the year around 85, 86, goes sideways. It's just like this one's like all over the place. Okay, within a month, she's up to 93, and then another month she's down to 80. Then another month, or another couple weeks, she's up to 87. Then she drops down to 75, jumps up to 82. She's like all the place. She makes a low of 69.5, and then from there she goes back up to another high at the end of the year, 93. From there, she ends in the middle of January at 79. All right, the end of February at 89. Now she's settling in at 81.75. And where are we on this one? We're at 85. So, looks like we're going to end up buying these things at 85. And 2,000 shares of TSO. Now, what's TSO looking like? TSO, and we're looking at the 85s of TSO. Wow. I have to go with more strikes. 84.5. And there's the 85s right there. Oh, I could deal with that. 34 cents. That's what, I don't know. 0.34 times 2,000. That's 600. 680. $680 a week until I hit my target price. I can deal with that. All right, back to where we are. We are done for the day, and let's find out if we got any questions. If not, we're basically done, and we will see you again. I'm thinking sometime tomorrow. I'll just check in right 3 o'clock on a Friday, because I like doing that just before the end of the just before options come, so I can find out exactly where I am. Now, if I'm going to do it, I might as well show you guys too. So, what are we looking for? Okay. No questions. All right. Well, you guys have a lovely day, and we will chat with you next time tomorrow at 3, just before closing. All right. This is James cutting out. We'll see you tomorrow at 3 o'clock and see how our options go. There's nothing wrong with me loving you.
And now be able to feel that strength in my life every day, and to see him being that way with our children, and to know that he chooses the best father